So we're getting a little closer to talking about the the stocks we should be investing in. So before we get there, I just want to go over a couple more concepts um, before getting to what we should be investing in. One, you can try doing your own experimentation, maybe investing in about 10 different stocks to see how you do. I personally did this over the last year, and what I found was in this horrible economy that we've kind of found ourselves in, um, really out of 10 stocks, only two actually provided gains. Not only did they provide gains for me since last August, but they actually provided really, really, really good gains, basically in line with the 40% figure that I have been discussing all through this video series. Um, so what we want to kind of take home is that companies that lose are always going to lose. Companies that win, more than likely, are always going to win. Obviously, there can be shakeups, and we have to be somewhat vigilant, against overall market changes over time. But in general, I think I've alluded to there only being a very few amount of consistently winning companies. And I used to have this mindset that as far back as like 2007, 2008, and then again in 2013, when I was kind of revisiting the stock market, I had this like weird mindset of that company way up there, that successful company, it's already successful. I missed the bandwagon, so I can't invest in it because I would have had to invest in it 10 years ago. After over 10 years since that event, I've come to realize I couldn't be further from the truth, and that what put that company up here is what's going to keep it up here. The winners always win and the losers always lose. So if you invest in 10 stocks over the period of a year, if you have 8 losers, you got to cut those companies loose because they're eating into your gains. I might have gained 100% on each of my 2 winning stocks, but I never made any real money because all the losses from these other 8 stocks ate into my profit. So I didn't make anything. So I took, say, $1,000, put $100 on 10 different stocks. So 2 of those stocks, I made $100. So my $100 investment was $100. $100 investment was now $200 for each of those 2. So out of $200 put on 2 companies, I made $400. But I lost that spread among all these other 8 companies. So I didn't make any money. But if I took my full $1,000 and put it just into these 2 companies, I'd just split it in half, I'd have like $2,000. So that is why it is so important not to have any investment at all in a losing company, in a bad company, because that company will drag you down. It's going to eat into any potential profits you're actually making. So we only want to put our money in companies that are actually making money. So we're going to really, really talk about this very soon, probably the next video. So subscribe and keep an eye on this playlist. And we're going to talk about which companies are actually making money. Because again, a lot of companies are not making any money. So, I don't want to dedicate an entire video to this, but I also want people to be aware of typical market cycles. As a rule of thumb, just my observation, it seems to me that sometime between Memorial Day and Labor Day every year, so think May to September, the market's usually up here. We know the market goes up and down, up and down, up and down. Typically between May and September. I don't know what the peak is. It could be May. It could be 4th of July. The market's pretty high right now. Is it going to keep going higher after this? I don't know. It's 50-50. The market today on July 3rd, 2023 is pretty high. And is August going to be higher? I don't know. It could be. September, is that going to be higher? I don't know. But I do know from Labor Day back to Memorial Day is usually low. September, October, November, December, Christmas is pretty sad. A lot of people get the urge to sell their positions in December. Don't do it. Just hold on to it. If you have a good company, hold on to it because better times are coming. It's just the way the market works. Don't be afraid of dips if you have a good company. If you have a horrible company that's in bankruptcy, sell it as soon as possible. We talked about this in the last video. Don't gamble. Don't own a company that, you would shut your eyes and go into, some other, go somewhere else for 10 years and come back and, you don't know how it's going to be. Just, you want to be in good companies so you don't have to worry. If you're in a good company, don't worry about the dip in December. In fact, work really hard, make a lot of money, and you're actually buy more of that stock while it's low because you're going to be maximizing your profit that way. So from September to May, just be busting your butt working and putting as much money into your stocks as possible because that's the time of year you're going to get the most bang for the buck. And the problem is people get excited in the summer because that's when the market is up and they start buying then. That's actually the wrong time to buy. People are buying because other people that are already in the market are excited. So they're trying to get other people to invest in the market. I'm making this video. It's July 3rd. I'm making this video because, let's face it, I'm excited that the market is up right now, and I just wish everyone in the world could be in the market and, making money off it. So I just want to spread the word, but really I should have made this video back in December when the market wasn't that good and people would be getting better deals, but it's just the way things work. So in the summer, good, winter, bad, but if you're in a good company, buy in the winter. You're going to get the most value, So yeah, that's pretty much, I just wanted to throw that in here before the next video where I'm going to actually start talking about which stocks we're going to buy. I've made videos on companies that might be good investments, and I'm going to go right out on a limb and say those are all gambles. A lot of videos I've posted regarding the stock market because I was doing my own research, they're gambles. Some of them worked out, some of them didn't, but I will tell you, it's actually pretty well known which companies are the best companies to be invested in. We all know who they are, and I guarantee you know who they are, and something's been holding you back from investing in them. The same thing that was holding me back from investing in them 10 years ago. It's like you think, oh, these are behemoths. It's too late. I had to get in on them in the 90s, but it's not too late because these companies are making money. They're making money. And when they make money, they can give their investors money. That's how the world works. If they're not making money, if they're in bankruptcy, how are they going to provide value to their investor if they don't have any money that they're making? They don't have any money to give. But if they have money, if they're making money, they can give money. They can give money in value. They can give money and more people want them because they're making money. They can give dividends. I don't even have to tell you what these companies are. You already know them, guaranteed, what the best companies to invest in are. And and again, any investment you make, you have to be prepared to 100% lose. And that's all there is to it. If you put $1,000 into any company that I mention, you just got to be prepared to lose it. I'm not going to make any suggestion on which stocks you should buy, but I can pretty much tell you if you get Cash App, a lot of these stocks are actually the top, basically stocks already on the list. Everyone knows about them, and I avoided them like the plague for years because I thought it was too late. But I am telling you right now, we're going to be discussing some companies that are basically where you should be putting your money. And you shouldn't put all your money in one company. You definitely should have at least a triangle or a table for supports because, again, we do not know what the future holds. We only know what the past has held. We know what the past has held, and we kind of know what's going on today. So we're going to be looking at what the historical returns were for some really safe, high-profile companies, and we are also going to be looking at what they're actually making for money, because when they're making money, then we can make money. That's called earnings per share. It is a very important figure. If the company you are buying into does not have a positive earnings per share, they're not making money. How can you make money? It's a gamble. It's speculation. You want to only invest in companies that have a positive earnings per share. That means they're making money. They're making money per share. And then you also want to see what their historical return was. I mean, if over 20 years they've only made 600% in a gain, that's 6x over 20 years. Like, that's nothing, you know? So these are things you're going to be wanting to look at. So anyway, subscribe, check the playlist, watch the next video. We're going to be talking more about this in the next video.